All right, so if you take a look at the top billionaires out there, a lot of them share this common theme, which is they made a bunch of money investing in stock within technology companies. And you can see this from Tim Cook at Apple to Steve Ballmer at Microsoft. That is the way they got super, super rich. So it got me thinking, how could you or I, just your average investor, start to invest like a tech billionaire? And that's what I'm going to show you right now in this video. There is a way for you to own these technology companies and do so in a diversified, less risky way for under $500. And you can do this through something called the Vanguard Information Technology ETF, ticker symbol VGT. Let's go through that fund. We'll talk about the companies, the risk, the performance. We'll do it all together right now. Welcome back. This is Joshua Talks Money. I have built and sold my tech company, and now I'm focused on investing and teaching the lessons that I learned about finance. I don't know it all. I'm still learning, but I hope that I can share those lessons with you right here every week, and they help you out tremendously. If that sounds good, please consider hitting that like button, hitting subscribe. It really, really helps me. I appreciate it. Okay, so tech billionaires, they're everywhere. You hear about them in the news. You know their names. I want to focus on Tim Cook. He's from Apple. He's one of the best executives, I think, out there. Apple is a tremendous company, and he owns about 3.3 million shares of Apple. That's how he got his wealth. It's pretty fascinating. And when you think about someone on the opposite side of this kind of tech landscape, that would be Microsoft, the other big name. Steve Ballmer was actually employee number 30 at Microsoft, which it's just crazy to think about, right? And he allegedly owns 100 times more shares in Microsoft at 330 million shares. That's why he's, I think, the 8th or 9th richest person alive. It's crazy. And so you can see that they gained their wealth by investing in these innovative tech companies, and they were able to ride that amazing appreciation throughout the last few decades. And so I think it's important for you to consider owning technology in your portfolio. You know, right now, tech has pulled back. A lot of people have sold off some of their technology names because they've went up so much, frankly. That's where their profits have been. But I think for someone like you or I, if you're in your mid-20s, in your mid-30s, this is an amazing opportunity to own these names. Do you really believe that technology isn't going to be what dominates into the future? It's how I'm even filming this video right now. It's how you're watching this video right now. These companies are changing the world every single day, and they will continue to do that in ways we can't imagine. All right, that's my rant about tech. Let's talk about how you can own it safely in a diversified way. VGT. So this is another ETF from Vanguard. You know, I'm a huge fan. I talk about them a lot on this channel. And this fund was started in 2004. And it basically aims to track the information technology sector. It's fairly cheap to own. You can see the expense ratio is 0.1%, meaning if you have 10 grand invested, it's about $10 a year in fees. That's not too bad. It's definitely cheaper than what you probably see for your company's 401k funds or other things out there like that. And I quickly want to pull up some of these charts. Here you can see since about back in 2012, this is how VGT has performed. It's really impressive to look at. And it got me thinking, okay, so what's the difference between this and something like the Invesco QQQ, which is the NASDAQ 100 Index ETF? And I've done a video about that. You can check it out. And you can see their performance is relatively similar. They've just been crushing it. It's because they share many of the same companies, while this ETF, VGT, is focused really specifically on information technology. And if you actually wanted to compare that versus something like VTI, that's where I have a lot of my money. That's the total stock market. You can see that VGT has outperformed dramatically. So let's talk about why that is and the companies that have made up this fund. There's about 379 as I film this video. So when I think about that, obviously it's about 4 times that of Invesco QQQ, the NASDAQ 100. It's less than the S&P 500 companies, and they're all concentrated to this one sector. But 379 companies is a lot of companies. And so that does give you diversified exposure across all of them. And when I talk about the word diversified, I don't mean in terms of asset allocation, like your traditional stock and bond and real estate portfolio. I just mean that's a large number of companies that the money is spread out over. It's also spread out over different sectors within IT. And you can see those sectors here. So the vast majority of VGT, it falls into what you would probably expect: software and hardware. So 23%, 24%, it's split. Those are the main two areas where this fund has allocation. Okay, here you can see the top 10 companies. And right away, you can see that Apple makes up a huge chunk, followed right behind by Microsoft. Together, combined, those equate to 41.7% of the entire portfolio. And so it's something to keep in mind. For every dollar invested, 47 cents basically is going into those two companies. And that's not necessarily a bad thing, since those are such giant, strong companies in our economy, in the global economy. In fact, 61% of the fund is made up of the top 10 holdings you see here. Before we dive into some of the historical performance of VGT, I just want to touch on a personal story about this sector. And you know, I had a technology company. We basically built custom mobile apps for different businesses. And so this gave me firsthand exposure to these types of companies. And when I first started investing, I went to a financial advisor and I said, hey, I'm thinking about buying a bunch of Apple stock. And he kind of talked me out of that. He actually referred me to ETFs as maybe a less risky way to own a lot of these companies. And that wasn't bad advice. In fact, that's what this video is about. But the reason I had such conviction in the tech space is, think about this. We were using Apple computers to write code to build apps to iPhones and to Android devices. And we were using Adobe. Adobe is another one of the companies here in the top 10. We were using Photoshop to design graphics, for graphic design for websites and interfaces. And Salesforce, as a CRM to track our customers. And Cisco, it was how we had internet and all the equipment and hardware so we could stay online and do our jobs. When you have those companies literally facilitating the way that you make a living, it's pretty obvious that that'd be a pretty good way for me to spend and invest my money. And so I have. I'm very bullish on technology. And you can see why as we look at the performance. Since inception, the cumulative return of the VGT is 657%. Here you can look at cumulative returns from the 3-year, 59%, the 5-year there, 143%. If we want to look at averages, here you can see the average annual return since inception is over 11.6%. And if we were to look at the average return on a year-by-year basis, you can see some gigantic years. I mean, these numbers are really, really impressive. Okay, so what now though? Is now a good time to invest in technology? If you look, you can see that this fund has pulled back well over 25%. This is from a broader bearish market that we're facing here in 2022. There's chatter of recession, and technology growth names like this seem to struggle a bit when that is the environment that the market's in. But I truly believe that this is a great chance to start owning technology while everyone else is selling. And my theory on this is there's a lot of hedge funds and pension funds and people who are retiring soon who have made an extraordinary amount of money from this massive historic bull run in technology. And so they're getting out. They're locking in their profits. They're moving and taking off some risk because they have to. They're getting older, or they have to preserve capital for all their stakeholders. But for someone like you or I, when we're younger, able to do this, this is a great time. Not financial advice, but for me, this is a great time. I will gladly buy those shares at a discount. I will gladly accumulate more technology because I don't know actually. I can't even imagine what's going to happen in the next 10 years. Can you imagine? I mean, autonomous driving, some amazing things that happen with the way that we use devices and 5G. The possibilities are really endless. And so this is a way that you or I can invest in that space. And as I film this, VGT is around $340 a share. So you can buy a share right now. You can jump on Vanguard, create an account, and purchase just one share if you wanted to. I think overall, it's a pretty good option if you're looking to get exposure to the tech space. Okay, and so in conclusion, investing like tech billionaires, you or I can do it. You just got to own technology companies. You got to own them at the right time. And I think owning them over the long term. And so with those three things in mind, consider VGT. I hope this video was helpful. If it was, hit the like button, leave me a comment. I'll respond to each one of you, and I will see you back here in the next video.